Welcome, everyone, to another episode that promises to be exciting of my weekly price action based technical analysis. I'm thrilled to have you here, and into this session, we are going to be delving into a detailed analysis of the gold spot, the USDJPY, the GBPUSD, and also the US oil commodity, focusing on comprehensive price action perspective. And together we are going to be exploring the fundamental factors, recent market movement, and chart patterns to uncover insights that could greatly influence our trading decisions ahead of both the London and the New York session today. So get ready for an insightful session as we equip ourselves with knowledge that we'll need to make successful trading activity during the upcoming session. So we are all welcome once again, and I would appreciate if you can confirm to me in the comment section that we do have a very good video quality and audio quality, as this will help me to be able to make appropriate adjustments to help us have a better experience out here. So I will appreciate some feedback, please, if you will. And in that regard, we are going to be diving right into the business. But before we go into the business here, I would like to welcome newcomers. Those who are joining us for the first time, you are highly welcome on board. And what we simply do here is to gather here in anticipation of the New York session, ensuring that we review our existing positions. So we have a handful of financial instruments that we have been monitoring since the beginning of the week, and this is as a backdrop of the videos I shared during the course of the weekend, which includes the instrument on our watch list for this week. So it's appropriate that you watch these videos so that you can have a background knowledge of how we are going to be, what we are going to be talking about today, of course. And since this is going to be a 1 hour time frame analysis basically, so it's very important that you understand how we got to this current market structure. So try to watch those videos so that you can have a background knowledge of what we are going to be talking about here. And you can check the description box below. You will be seeing the link to those videos, and these videos are duly timestamped so that you can easily navigate to whichever aspect of the video is of your interest. So with that being said, let's dive in right into the business. Okay, I can see you, Daily. Thank you very much, Daily, for that confirmation. Good morning to you. Good morning, Anim. Glad to have you guys around. Okay, thank you very much for that confirmation. I'm so excited that things are quite working fine here. I had to do some little adjustment technically to ensure that we have a better experience today. So, and I'm glad that things are going on fine. So thank you very much, guys, as we dive right into the business for today. So the first thing we normally do, of course, is to check the economic calendar. And in fact, if you look at what has been happening in the last 24 hours, you might be a little bit frustrated, which I can understand. Things have been a little bit slow in the last 24-48 hours, and there is quite a lot of fundamental factors that are behind this. And one of those things is the uncertainty about the Fed rate decision coming up next week, and you know how this affects majority of the major peers. So participants are still yet to figure out if the Feds are going to be increasing interest rates or not. So that is why we have been seeing a phlegmatic situation across the US dollar pair. So we are going to be taking all this into consideration while we monitor and review our existing position. So participants are still waiting for a catalyst that will drive price action. So as a result of that, we want to check the economic calendar this morning to see if we can see anything that could help us to position ourselves ahead of the London and New York session. So you know how we do it. What we want to be looking out for are high impact events that will be affecting the US dollar, the Japanese yen, or the pound sterling. And for today, Wednesday, June 7, and when we look at the economic calendar for high impact, there are no high impact events that will be affecting any of the pairs that we are looking at for today. But what I did here was to filter in and include the medium impact event, which has a significant feature coming in from the US docket, and that is the goods and services trade balance. This is a very, very important event that we all want to be looking forward to, and it is coming up in about 3 to 4 hours from now. And this index is released by the Bureau of Economic Analysis and the US Census Bureau. So it is a balance between the exports and the imports of the total goods and services. So a positive value shows a sign of surplus, that is, there is a higher demand for the dollar, which is something positive that we are going to be looking forward to favor the dollar for today. And if there is a drop, then definitely there is a reduced trading activity or exchange for the US dollar. And if we look at the previous data here, we have a minus $64.2 billion, and we have a consensus projection of minus $75.2 billion. So economics and majority in the market are suspecting that there will be a reduction in the trade balance figures, which is not a good sign for the dollar. So we are going to be looking forward to see what the actual data is going to be like. Is it going to be as expected, below expectation, or even beyond expectation? But one thing for sure is that we are going to try to sniff out the current market structure using technical parameters, price action based analysis, to identify the psychology behind the price movement, so that we can position ourselves in such a way that we can catch any potential opportunity prior to this event or during and after this event. So with that being said, let's dive right into the chart. And as usual, the first commodity we are going to be treating, as always, is going to be the US oil spot. And on the US oil spot so far this week, we have seen a situation where price action has been bearish throughout the course of the week. And to further emphasize the bearish momentum in this market, we have a bearish trend line after we have connected a series of lower highs to further emphasize the strength of the sellers in this market. And I shared an update this morning, so if you had been with me on both my TradingView and Telegram platform, you would have received an update this morning on what our expectations is looking like. So for the sake of clarity here, let's go into my TradingView platform. I also shared this on my Telegram platform, of course. So I would rather go into my TradingView platform here, and let's see what the update had this morning as regards our plans on the US oil spot for today. So this is how we have been managing the US oil spot. So we only had one stop loss this week so far on this one before we enjoyed this bearish momentum to the downside. And this morning I shared something here. Okay, let's run through this quickly. So okay, this morning here I said here that the market structure has displayed a bearish outlook since the start of the week, supported by the presence of a descending channel, that's a typographical error, descending trend line. Additionally, trading activities remain below the weekly key level. Remember, we had a key level at the $72 area. We are going to be looking at that in a moment, which holds significance. So it is advisable to secure any sell positions below this key level at this point, while we also closely monitor the price action for further development. So let's go back into the live chat and let's see what I was trying to explain here. So this is the key level at the beginning of the week. Remember, if you had watched my video on the US oil spot, which the link is in the description box below, so that you can have an idea of how we got to identify that key level. So we had a key level at the $72 area, which was supposed to be guiding our trading activity for this week. And you know how we use our key level. If you had been with me, you would know that our key levels are levels that we mark out on our chart to guide our trading activity. So if price action trades above our key level, we have no other choice to look out for buy structures or buy patterns, that bullish patterns that will support a bullish momentum. And if price action trades below our key level, then definitely we have no other choice than to look out for structures or patterns that will be supporting an opportunity to sell. And if you look at what we have here on this chart, At the beginning of the week, we saw a bullish gap actually, which happened, and this is connected to the OPEC Plus decision during the course of the weekend, as we knew that the Saudi Arabian government decided to cut oil production by 1 million barrels per day starting from next month. And we also have Russia trying to cut, I think, about 900,000. I don't have the actual figure on that one. So because of this news over the weekend, we had this bullish gap, as they are actually trying to artificially increase the demand for the oil commodity, and we saw the market reacted in that regard. But we saw here that the reaction didn't hold. It only lasted for about 24 hours, as we saw this choppy situation between the $73.40 level and the $72.50 area, where we were expecting that price action will continue to climb higher highs. And remember, we bought at the breakout of that resistance line, and we were taking out at a loss as that momentum did not last long. Now, we saw the situation yesterday on Tuesday, where price action broke down our support line, which helped us to trigger our sell position. And since then, it has been looking bearish in this market. And coupled with the fact that price action remains below our key level, remember, our key level, if price action remains below the key level, we have no other choice than to look out for selling opportunities. And for this reason, since in the last 48 hours now, price has remained below the structure. And the same thing also, we have a bearish trend line after connecting the series. After connecting the series of lower highs, we have a bearish trend line. So it's looking more reasonable to look out for selling opportunities at this point. So our center of focus on the US oil spot for today is mainly going to be between the range between the key level here and the $71 level, where we shall be looking out for opportunities to either buy or sell. And considering the fact that price is trading below the key level, that is one, below the trend line, at this point we want to be looking out for selling opportunities. So what I said here during our live session, that is, for those who had missed out on this opportunity here when price action retested that key level, then we want to be positioning ourselves in such a way that we can add more position or add a new position if price action breaks down the $71 level. And if this happens, we want to be part of a bearish move to the downside. Obviously, this is still below the bearish trend line, and it still supports the idea of looking out for selling opportunities at this point. Now, there is a caveat to the sell position here in this market, and that is one of the reasons why I said that anyone who is in the sell positions right now should ensure that the position is secured, because anything could actually happen. And the reason why I have said this is this. Now, look at what happened here on Tuesday morning. That was yesterday during our live session, when we acknowledged price action respecting that support line at the $70.20 area. We saw bullish traction from that area, leading into an engulfing bullish candle, bringing price back into our key level here. So because of that situation there, I'm very mindful of that level. So if we are going to be selling, we want to be very careful, as we might likely see a situation where price action could transition into a higher low, which is a sign that buying pressure is building up. The only way I'm going to feel very, very comfortable in a sell position here is for price action to take out that $70.20 level to give me a level of confidence that we are actually good to continue to sell here. So selling at this point in time right now is still looking very tentative. So we want to be very careful, be around, so that when price action moves significantly well in our favor, we want to be moving our stop losses accordingly to secure or lock in some profit, so that we don't get caught up in any sudden pullback that might likely take us out in a loss. So let's keep this in mind while we continue to monitor price action here. So that is that for bearish expectations. Now, you know how we do it here. Despite the fact that we are looking out for selling opportunities, we also want to take into consideration the potentials that the buyers have in this market. Now, even though we are trying to sell, we are looking out for selling opportunity, we have a sell position running, we cannot ignore the potentials that buyers could come in at any point in time. And that is because of this level which I identified here, at the $70.20 level. We saw an engulfing candle from that area. We also saw an engulfing candle from the structure here. So I'm of the opinion that if the buy pressure continues, we might likely see a situation where price finds it difficult to find new lows, and if that happens, we might likely begin to see a reaction to the Saudi Arabia and the OPEC Plus decision to cut oil production, and this might lead into a situation where price will find a higher low, break out of the trend line, break above our key level to incite a bullish momentum at this point. So we want to take this into consideration while we also hold on to the bearish bias too as well. So if we are going to be buying the US oil spot for today, what do we want to see on this chart that will make us change our bias from bearish to bullish? Now, the only thing I want to see here is price action to find a higher low. That is, sellers find it difficult to break through. Then if that happens, I want to see signs that this trend line, this bearish trend line we identified earlier, is no longer strong to negate bullish attempt, and this would reflect on the chart as a breakout of that trend line. And remember, after the breakout of the trend line, we are not getting too excited. We don't have a buy stop order yet. We want to wait for confirmations that bullish momentum is actually gaining traction at this point. And the only way we can look out for that is to scale down into our lower time frame to look out for retest of structure to happen. And the retest of structure will happen in such a way that price retests structure, buy pressure resumes. Then we want to be part of a bullish momentum to the upside, having a buy stop order above the key level to continue to join that bullish momentum all the way to the upside. That is how we are going to be buying the US oil spot for today. But if price action remains below our trend line, we have no other choice than to continue to hold on to a bearish bias. So these are my views here on the US oil spot for today. So if you have any questions whatsoever, feel free to let me know in the comment section, and trust me, I am willing to be of help in that regard. And of course, I will be with you on both my TradingView and Telegram platforms to give you updates as at when due. So let's see how this plays out in the next couple of hours, and then we shall try to maximize the potential of any move that comes in here. So that is that on the US oil spot. So we are going to be moving on to the next pair. So the next pair I'm going to be looking at this morning is going to be the GBPUSD. Now, on the GBPUSD, what have we been witnessing here so far this week? Personally, I have no positions running at this particular point in time, but I mentioned in my commentary on the Telegram platform that for those who sold below the 1.24250 should ensure that they move all stop losses to secure the current position, because anything could happen. And considering the fact that we have been seeing some higher lows in this market since the beginning of this week, as you can see here, this is a sign that buyers are gradually gaining momentum. So we want to be very, very careful of just jumping into any sell position. So let's quickly run through my comments on the GBPUSD this morning. Then we go back into the chart to see how we are going to be positioning ourselves ahead of the major event coming up today. That is the trade balance data. So here we are on the GBPUSD commentary. So this was how we have been managing the GBPUSD since the beginning of the week, and it's quite obvious that price action was initially bearish at the beginning of the week before we begin to see some bullish traction come in, hereby leading into a situation where price action has been range bound in the last 48 hours. So this was my commentary this morning on the GBPUSD. So I said here that despite the fact that a higher low has occurred, the selling pressure persists as the 1.24250 zone retains its strong selling influence. If you currently hold a sell position, it is advisable to secure your position. We will continue to monitor this price action. So like I told you earlier, I do not have any positions currently on the GBPUSD, and the reason why that is simply because of this obvious fact that we have been noticing higher lows in this market. And because of this situation, I'm going to be very careful of taking any sell position here unless structures gives me a significant signal to actually sell at this point. And one of the things I want to be looking out for here to sell the GBPUSD is to see price action break down this trend line. Remember, this trend line has been a major determinant of buy pressure since last week Thursday. As you can see here, if I connect the series of higher lows, you will see how this level has consistently negated attempts by the sellers to break through. So if this trend line continues to hold, I will have no other choice than to remain patient for a breakthrough to happen before selling. So for me to sell here today, I want to see price action break down the trend line, and not only just break down the trend line, give me some confirmations that I want to sell. And for me to sell here, I will look for a retest of structure. It could be the retest of the trend line or the retest of the 1.24250, which obviously has been a strong selling niche in the last 24 hours. But one thing for sure here is a breakdown should first of all happen to give me a sign that, okay, sellers have the capacity to really break down this trend line. So if this happens, I look out for a retest of structure followed by continued selling pressure on my lower time frame. Then I could actually think of selling the GBPUSD, then have a sell stop order below the 1.23850 to add more position to my existing trade. So without this, I'm not going to be thinking of selling the GBPUSD for today. So anything below the trend line and below the 1.24250 gives me an opportunity to sell. So that is what we are going to be looking out for today to sell the GBPUSD. So let's hope it happens, but if it does not happen, then we take our highs of that and look out for opportunities to buy. Now, if we are going to be buying the GBPUSD at this juncture on the market, well, remember we had a key level at the beginning of the week, which was situated at the 1.2440 area, and you know how we use our key level. And for those who don't know how we got to this point, please watch the video on the GBPUSD. The link is in the description box of this current video you are watching right now, so that you can have an idea of how we got to identify the 1.2440 as a determinant factor for this week. So for me to buy the GBPUSD today, I would rather see price action break out of that key level to give me a signal that buyers are coming in to stay in this market. So I would have a buy stop order above that structure. I could risk a buy stop order and then have a stop loss, which will be dovetailing to about 25 to 30 pips just right below the bullish trend line here, to give room for price action to breed in case there is choppy situation or retracement phases before the bullish momentum begins. So we should be having like 25-30 pips stop loss around that area to give room for price action to break. So if price action breaks out, I have a buy stop order, but I still think that after the breakout happens, there'll still be some couple of retest of structure before a bullish momentum begins. So after the breakout of structure, we could see price drop back into the trend line or into the 1.24250. But most important pattern we want to be looking out for are double bottom structures, reversal patterns, that structures are supposed that we want to be buying the GBPUSD. Then after that, we want to join. Then we have structures like the 1.24590, where we can also have another buy stop order to be part of another wave of bullish momentum. So that is how we are going to be buying the GBPUSD for today. So our key level still remains our determinant factor for this week. As long as price action remains below the key level, we look out for selling opportunity. But at this point, I can't sell because of these higher lows that we have been noticing here since the beginning of the week. So I said we need price action to break down that trend line to the downside, give us some confirmation, which would reflect on the chart as a retest of structure before we join any move to the downside. So let's keep this in mind. Let's mark this out on our chart, and even trust me, I will be with you in the comment section as usual on both my TradingView and Telegram platform to give you updates as at when due. So if you have any questions regarding what I just explained, feel free to let me know in the comment section. So with that being said, here I will be moving on to the next pair. So as you can see, the market has been very slow this week. We've really not seen that huge traction we normally see during the first half of the week, and this has a whole lot of reason. I told you there are fundamental factors around this, especially the interest rate decision coming up next week. There is still a limbo in the market. There is still uncertainty in the market as major key players are yet to decide what is likely going to be happening next week. And this is the reason why we have been witnessing this old choppy situation. So we need to be very, very careful that our structures mature before we want to take on any positions during this kind of market environment. Okay, so let's move on to the next instrument for today, which is which one should I take next? I think it's the USDJPY next. So let's look at the USDJPY. So on the USDJPY here, we actually had a sell position this morning running, but at this point we have been taken out of that sell position. And let's look at what my commentaries were at the beginning of today. So when I monitored price action activity in the last 24 hours, I was able to come up with a thought process that I will be using to guide my trading activity for today. So here we are on my TradingView platform, and these were my commentaries this morning. So I said over the past 24 hours, the price movement has been range bound, and the 139.150 level seems to be experiencing buy pressure at the moment. And so it is important to protect the current selling position. Nevertheless, if there is a breakdown retest of the 139.150 level, it could create opportunities for selling. It is worth noting that the potential of the buyer should not be overlooked at this point. So let's look at what we are saying here. Going back into the live chart, 1 hour time frame, and let's look at how the week started for us on the USDJPY. So at the beginning of the week, we had our key level. Very important. We need a key level that will help us guide our trading activity. And this was sitting at the 140.00 level, which as you can see, price has since been trading below that area, further supporting the idea that if price action remains below our key level, we want to be looking out for selling opportunities. Now, the week started with a choppy situation initially, where we saw price action ranging between the 40.250 and the 139.370. So this gave us a tool to work with for the week, and you know how we do it. Whenever we have a simple flat channel like this, we want to see price action either break out of the resistance for buying opportunity or break down the support line for selling opportunity. And prior to our live session on Monday, we already saw the breakout of the structure here, and we said here that we are going to be waiting for a retest of structure to happen in attempts to join another wave of bullish momentum. Though we had our buy position triggered when price action came back, and we saw price move about 30 pips, I think. Let me check. Price action moved about 15 to 20 pips thereabout before the sell pressure resumed, and we moved our stop losses according to secure the position at break even, and we were taken out of that position. And what happened afterward was price action dropped significantly well to the downside, hereby triggering our sell stop order below the key level. And since then, price action moved about 80 pips in our favor before this old choppy situation began in the last 48 hours. So you can see now that since Tuesday, price has been range bound within this area, and we might likely see price come back into the structure. So price has been ranging between the 140.00 and the 139.150. And one of the things I was saying here this morning as regards to this current structure is this 139.150. And what is it about this structure? Now, if you look at what has been happening here since yesterday morning, you will see how this level has been negating all attempt by the sellers to break through. And because of the situation, we cannot ignore the potentials that the buyers have in this market. This might likely be a platform that will incite a very strong bullish momentum through the second half of the week. So we want to be very, very mindful of this situation here. So with the situation that we have, look at this impulsive move that brought us into this point, and it's likely that price action could transition into a reversal pattern, which is not something I don't like this kind of reversal pattern. It's too wide for my liking compared to the impulsive move that brought us to this point. So we will still need some confirmations to happen before we want to be joining. So before we go into the details here, let's first of all talk about the potentials of the sellers in this market. Then after that, we are going to be talking about what to look out for if we are going to be buying the USDJPY today. So if we are going to be talking about the sell potential here, first of all, I want to see price action break down this 139.150 for me to even be thinking of selling at this point in time. And the reason why that is very, very simple, you will see that every attempt by the sellers to break through the structure has been met with strong resistance in the last 24 hours, which is a red signal that buy pressure, buyers presence are very strong around that point. So I would rather see a breakdown of the structure, retest on my lower time frame to start considering selling the USDJPY. Then in addition to that expectation here, looking at how price action has started this week, you can see that we have a lower high. And when we have lower highs like this, the next thing we want to be doing is to acknowledge it by connecting the series of lower highs so that it can give us a descending trend line, which of course we are going to be using as a yardstick to guide our trading activity for today. And if we bring out our line chart now and then connect the series of lower highs, in fact, I would like to make this a much more thicker to emphasize the level of importance of this trend line that you can see here. So after connecting the series of lower highs, we have a beautiful trend line which we are going to be using to guide our trading activity for today. And as you can see, price has been respecting it at every point in time. Buyers finding it difficult to break through the structure, and at this point in time it appears price action is approaching that level. But since we are yet to see a lower high here, I would want to see a breakdown of the structure to give me a confirmation to actually sell the USDJPY today. So let's see how price action plays out. And remember, we also have the sell potential of this market has a privilege of giving us more opportunities to add, as if a breakdown of the 138.800 happens, we want to definitely be thinking of adding more position to our existing trade. So that is how we are going to be selling the USDJPY for today. So let's keep monitoring price action from the structure, and I will be with you in the comment section of both my TradingView and Telegram platform to give you updates as at when due. Now, with that being said here, let's look at the potentials that the buyers have here. Now, one thing we also want to take note of here is the fact that price is still trading below our key level for the week, which is situated at the 140.00 area. So even if we are going to be joining any bullish momentum below our key level, we know that we are not buying at our territory yet. So we will need a significant confirmation that will give us an idea that buyers are gradually gaining momentum at this point. And for us to buy here, I want to see price action take out this trend line. Remember, we identified this trend line earlier, this one right here, which has been negating bullish attempt. So I want to see price action take out this trend line, and this would reflect on the chart as a breakout of structure. And remember, we are not getting too excited in this kind of scenario because it could still turn out to be a false breakout. So for us to feel confident buying here, we want to see price action do a retest of either the trend line, and we also have the structure here at the 139.640, where appearance of buy pressure around the zone would incite an opportunity to buy. And if price action continues to the upside, as soon as it gets into the 140.00 area, we want to move all stop losses to secure this current position. And one thing about the 140 here is that it also shares a confluence with that trend line, that bullish trend line we identified on the 4 hours time frame. So let me show you quickly, for those who are not part of our live session prior to this one, let me show you the trend line I'm talking about. Okay, so this is the support line of the ascending channel we identified on the 4 hours time frame. So I'm talking about the support line right here, where it shares a confluence with that 140.00 level on the 1 hour time frame. So let's go back into the 1 hour time frame. I wanted to show you how important that line is. So right now, if price action now gets into that 140.00 area, we want to move all stop losses, secure the buy position, and it now depends on how price action reacts to this area, and that will determine if we are going to be adding more buy position to our existing trade or get ready to sell. So if we are going to be selling, then definitely we want to see continued selling pressure below the structure to incite a bearish move to the downside. And if price breaks out, retest, then this will welcome opportunities to buy the USDJPY. So this is how we are going to be trading the USDJPY today. So in a quick recap of what we talked about, we have two structures that will be guiding us for today. The first one is this bearish trend line, which means that as long as price remains below the trend line, we look out for structures that support opportunities to sell. But if price action breaks out of that trend line to the upside, then we want to look out for patterns that will be supporting the idea of buying the USDJPY. And that is the first one. Then the second one here is the 139.640 to confirm the buy opportunity in this market. And we have the 139.150 to confirm the idea of selling the USDJPY for today. So let's mark this out on our chart, and you can also screenshot my screen so that you can use it as a reference point when you're about to make your independent decision. So that is that on the USDJPY for today. If you have questions, feel free to let me know in the comment section. So that is that on the USDJPY, and let's move right into the last pair for today, which is going to be the XAUUSD, that is the gold. So on the XAUUSD for today, we had a sell position over the night where we had our sell stop triggered. But one thing I would like to acknowledge here, based on this XAUUSD chart, well, the first thing here is that we initially bought, remember we bought the XAUUSD on Monday, I think a couple of hours into the New York session, where we had our buy position triggered around the 1,944 $1.20 level, and price action moved significantly well in our favor, moved over close to 200 pips on the first position. And remember that we had multiple entries where we added more positions at the breakout of the 1,950. Then we also had the breakout of the 1,955. So we were able to maximize the bullish momentum on Monday for us. But since then, we have seen a situation where price action has been caught within a choppy situation, within a range right now between the 1,966 and the 1,955, to further emphasize the level of indecision in this market. So at this point, it is very needed that we want to be careful around this area. So we already have a structure to work with. You know how we do it. Whenever we have a simple flat channel like this, we expect that we want to wait patiently for patterns to mature, and this can only happen if price action breaks out of the resistance line here at the 1,966 to give us an opportunity to buy. So personally, I have a buy stop order sitting along this area. Definitely we want to see price action take out all the sell positions here to give us an opportunity to buy the XAUUSD for today. So anything above the 1,966 should be giving us an opportunity to buy this gold commodity. However, if price action breaks down our key level, remember our key level for the week is sitting at the 1,955. A breakdown retest of this level will further confirm an opportunity to sell this one. So I told us here this morning that the sell position we had a breakdown of the 1,963 should be secured, and if you had done that, you must have been taken out of your position right now with a small profit at least. I think I had about let me see, about 40 pips around on this one, and this has been taken out right now. So let's see how price action plays out. So heading into the New York session today and the London session, let's have a buy stop order above the 1,966 here to be part of a bullish momentum, and we should have wait for breakdown retest of the structure. So as soon as we have a breakdown of structure, you could scale down to your lower time frame, 5 minutes, 10 minutes time frame. Look out for retest of structure before joining the bearish move to the downside. And you could as well have a sell stop order. That is for those who are profitable on the XAUUSD so far this week. You can have a sell stop order outrightly and test waters to see if this move is going to move as expected. So that is that on the XAUUSD for today. It's a simple setup, so let's be on standby, and trust me, I will be in the comment section of both my trading view and Telegram platform to give you updates as at when due. So on this note, I want to call it a day here. It has been a wonderful moment with you guys, and please, I want to plead with you that you should ensure that we don't get into the compulsive act of taking unnecessary trade. This kind of market environment where we are caught within an indecisive phase has a tendency of making us make impromptu or unnecessary trade. So we want to be very, very careful. Let's wait for our structures to mature before we want to join any trading opportunity. And like I've mentioned during the course of all the instruments we are monitoring so far, I was able to highlight how we are going to be executing this trade, waiting for structures to mature before we join. So let's keep this in mind. Screenshot my screen if you want to, and stay with me on my trading view and Telegram platform so that whenever the next opportunity comes, when I drop the update, you will be around to be part of this move. So thank you very much, guys, and I look forward to seeing you right in the comment section on both my trading view and Telegram platform as we continue to monitor price action. Do have a wonderful evening, everyone. Bye-bye.